Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my great friend, Thomas Parilla, president of Parilla Investment Group. Thomas, how are you?
Hey, good, Ivan.
I wanted to get you on to talk about everything that's happening on in precious metals, the world. So much craziness that's happening in the world right now. Where are we going to go with silver and gold from now? I guess we're only a month away, month or two away for 2025, but where are we headed for gold and silver?
Yeah, I'm going to stick to my projections. I think a year out from now, gold's going to be around the $5,000 area, silver around the $100 area, and I still think the U.S. dollar index trades down into the 90 area late next year. We got it down from I think the last time we spoke, we were at about 104, 105. We traded down to about 100, so about a 5% drop. And you could tell the U.S. government came in and defended it at 100. Their fear, I believe, is that if it drops to 100, it's going to hit 90 fast.
Right.
So they want it to be more of a managed situation. So I'm going to stick to my model. I think Trump coming in, I think right now people are speculating about the growth next year with that slow, maybe the rate cuts by the Federal Reserve. I think Trump's facing a lot of issues that are bigger than people know right now because the government has really kicked this down the can down the road trying to get the election done.
Right.
Uh, but I mean, the commercial real estate market is in an absolute free fall. Now I'm talking depression level. Companies buildings are going at 60, 70% discounts when they're being resold. I saw one the other day. It went at a $50 million discount and it didn't get any bids.
Jeez. So what does that tell you?
Well, the underlying issue there is bad. Now, the good part about it, Trump being a real estate guy, is probably the best thing ever happened to the commercial real estate sector, having Trump come in because he knows
Right.
that sector and
Yeah.
he knows how important it is. But he's also got to look at the whole underlying economy. I mean, every time we get a jobs report, you notice the revisions from the old reports all go down.
Right.
So I think they've been just been fudging these numbers. They're spending about $3.50 to create $1 of GDP. So none of this has been growth whatsoever. It's all just been debt. I mean,
Right.
you look at the retail sector, talk about, I'm talking about the CRE meltdowns. Retail closings this year, we've had 6,189 stores closed in 2024. That's a 60% increase over 2023.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. It's just absolutely insane. Monetary metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
And hardly anybody's really talking about it. But you got
Yeah.
two sectors there. That's a big part of your economy, commercial real estate and retail, both taking big hits. Now, that should be showing up in your GDP, but it's not because the government just keeps spending.
Right.
Here's an interesting thing I read today. And this tells anybody out there why you should buy gold or silver. This is it. If you made $500,000 per day every single day since the Great Pyramids were built, you would have less than half of what the U.S. government borrowed since June.
That's crazy.
It's
That's
insane.
actually insane.
I mean, if you went into a business class and taught this, no one would believe it.
Yeah, they wouldn't believe it.
But this fiat currency has just gotten out of control. And in the gold and silver market, you can kind of see where how it can become explosive quickly because you've got so many shorts in the bullion banks right now with this fractional gold and fractional silver. Right now, gold is 131 to 1, silver 409 to 1, and that's paper to physical ounces.
Wow.
So right now, you've got 409 paper ounces of silver to 1 ounce of physical.
That's just it's mind blowing because when will that end? Like when will people? I don't even know, Thomas. That's
Sooner,
crazy.
yeah, sooner or later, the way it ends is the shorts have to cover that, and that's when you end up with a real meltdown. And I don't know how some of the banks could survive it, and that's probably why they fight so hard to keep it in line because they understand if they have to unwind that short position, it's going to be almost impossible. I mean, would they shove gold to 15,000? 20,000 just trying to cover their positions.
Right.
That'd be a real possibility. But those are the things I'd really keep an eye on right now. I think Trump comes in, it'll help the commercial real estate market quite a bit. The rest of the economy, though, he's got a real struggle on his hands. Now, where it will get interesting, the last time Trump came in, he said he could grow the economy at 5%, and he
Right.
did it. And everyone told him there's no way with a mature economy you can do that.
Right.
As soon as he did it, the Fed flipped around to quantitative tightening, and they pulled that liquidity right back out of the economy, and all we ended up with was debt.
Right.
And that's the problem with tax cuts. You've got to have the growth to counterbalance it on the other side of it. Now, the Fed destroyed the growth side of it by quantitative tightening. If they do that again, we're going to have the same scenario where you're going to have a real nice bump. GDP is going to go up, and then all of a sudden the Fed's going to start pulling liquidity back out.
Right.
We're going to end up with a higher debt model. Everything points back to gold and silver. I mean, the rest of it is just going to be smoke and mirrors. I mean, since 1981 in the United States, our tax revenue has gone up 4.9%, which is good. But our debt has gone up 44 times. So
That's
there's no
yeah,
way
that's there's no way. I don't know, like it's gonna end like Roman times.
you cannot run a country like that. You just can't do it. I've been watching what's going on right now over in the Eurozone, and that's interesting. I mean, a little known thing they had over there was they had a gold rebalancing act years ago.
Hmm.
And what that said is they were trying to keep the economies at gold at 4% of GDP. And right now, France owns 2,435 tons of gold, which is 4% of their GDP. And you're watching now as Poland, Czechoslovakia, all the rest of them over that area are all trying to get to that number. As
Right.
soon as they get into that 4% range, then I think you'll see probably the Eurozone move to some type of a gold-backed standard. And that probably is when the United States will have to do a coordinated move together. There's no doubt in my mind a new currency is coming. It won't just be gold backed, it'll be a basket of commodities with gold as the anchor. But there's no doubt that's coming. Otherwise, you just can't continue to do this forever with just continue to print paper.
Hmm.
Now, the
How?
gold sector is going to be really interesting because we
Yeah.
go through these cycles in gold
Yeah.
where first the price mode goes. We went from 1,800 to 2,700, 50% move up in gold. At that point, typically your producing companies do the best. So your Newmonts, your Barracks, your big guys, because they've got gold actually to sell, gold and silver to sell into the market. They dig,
Right.
they sell. But then the final phase, and this is the phase that we're approaching then, is when the exploration stocks start to take off because the producers are going to need supply and supply isn't out there. So they're going to have to go and look for it. So I've been doing a lot of work up there, like in the Golden Triangle up in Canada. I think that's going to be one of the great places to look for exploration plays.
Really.
So yeah, on the stock side, that's where I would focus. There's probably there might be a dozen companies up in that area you could buy. I kind of focus on four. I like Goliath Resources a lot. They've got over 100 drill results that are coming. And the way I look at it
Wow.
is even if they hit on 60% of those, okay, now you got 60 quality assays to release.
Right.
That that's a lot of fuel. So once that starts coming, that's gonna, just hit one time. I would say week after week. But I still think you're gonna see buyouts like for Goliath. I've seen them being bought out for maybe 2.5 billion when it's all done. And somebody like Newmont or McEwen, somebody like that's going to step in and scoop them. And that's what happens. You get companies like that or Juggernaut, Tudor, Arizona Gold and Silver down here, their properties here in the U.S. I look for companies that are fully funded and have assets in the ground.
Right.
The interesting part about this, and this is where it becomes kind of fun later on, I'm valuing Goliath at 2.5 billion in a takeout, but that's with gold sitting here at like 2,700. If
Yeah.
gold goes to 5,000, now are you talking about a $4.5 billion buyout, something like that? And that's where the assets in the ground. I would tell your listeners, start looking for companies that have good quality assets in the ground that somebody else is going to want to buy, somebody big.
Right.
And they're going to buy it, they're going to move them into production, and they'll bring them right online. This is the cycle that we're in at this point. I think everything's going kind of as planned, what we saw coming together earlier in the year.
Right.
The debt's gone up about 1 trillion every 90 days.
How insane is
Yeah,
that?
yeah, and
When
I think I said this maybe a year ago. I mean, the market itself is going to make us all look like geniuses because this sector is just the place to be. It's
Right.
the right sector at the right time in history. And if you're going to run up 4 trillion a year, even if Trump comes in and cuts spending, it's still not going to be enough. I mean, the debt's
Right.
still going to go up. He might be able to cut the deficit, but you're still going to be running a debt. And
Yeah,
that debt
he
load
could
has,
still yeah, he could start for cutting you off, but he could still make the economy like get better. He can help jobs in America. He can help everything, but the underlying problem of like he doesn't own the banks. He doesn't print the money. And the people who print the money, that would be the underlying problem because the debt will just keep going.
yeah. And the banks, the problem the banks have, twofold. When you talk about the commercial real estate meltdown and the meltdown in the retail sector, that all comes back to the banks. And I'll tell you what, the commercial real estate market, when those companies default, it's a big hit to the bank. You're talking a hundred, $200 million comes back to them. Now they got to turn around and then sell that asset, but the problem is the underlying asset is worth 40, 50% of what it was worth when they did the loan.
Right.
And then the bank just has to eat it. The other part about it, the banks are sitting on a huge amount of treasuries. And we've had the 10-year creep back up to 4.306. That'll be the thing. If it keeps going up, the banks are losing money on their treasuries all big time. So I think what will happen is the government's going to have to talk that number down as they're going to have to promise additional interest rate cuts are coming
Right.
and get the bond market rolling. If they get that thing back below, 4% would be a big help to the banks. And that would be massive for the gold and silver market because as rates are going down, gold and silver is going to go back up. So I think we're set up pretty well. It's going to be a lot of, the turmoil is going to be huge.
Yeah.
No matter what, with Trump in power, 50% of, the United States isn't going to back him. You
Yeah.
see it already, protests in the street. People are saying resist, not my president. Um, so it's going to be a time of real turmoil. I think he gives everyone a lot of hope, though. I mean,
Yeah, he does. I believe so.
you can see what's going on in Ukraine, what's going on in Israel. I think the fact that so far the Iranians have not attacked Israel and counterattacked, I think it's because of Trump. I mean, I think they're waiting to see, what message he sends them.
Oh
Um,
yeah.
so yeah, I think we're in for an interesting year, but I would say 2025, people should stay fully invested in the precious metals market. They should follow your example and just keep buying silver, gold
Yeah,
monthly.
absolutely.
And that's the key. Don't worry too much about the price. Just go ahead and average your way in monthly and add to your stack. And just remind everybody to demand delivery. Hold it in your own hands if you possibly can.
Yeah, I absolutely agree.
We should be set up for 2025 to just a fantastic year in the market. So I think precious metals are set up perfectly.
Yeah, no, it's exciting times, Thomas, especially, precious metals market is like so interesting right now because there's just there's just so much turmoil in the world, like what you were saying. So I think it's gonna really save some people's lives, not only their lives, but of course their future. But where can people connect with you, Thomas?
Yeah, the easiest place is out on LinkedIn, and I try to check in daily, even if I'm out of town. So that's the easiest way to get a hold of me.
Nice. Well, it's such a huge pleasure having you come down to Wall Street Silver. And everyone watching, thank you so much. Please hit the subscribe button. And Thomas, thank you again for coming down to
Yeah,
Wall Street
have a good
Silver.
weekend, Ivan.
Oh yeah, have a good
Thanks.
weekend. Thank you.